If you're a 1099 independent contractor, freelancer, or self employed business owner, this video could save you thousands of dollars. Most people overpay the IRS not because they make too much money, but because they don't understand how deductions work. In this video, I'm going to break down how deductions actually work and legal strategies to lower your tax liability. Let's begin. What 1099 really means. You are not an employee, you're your own business and responsible for both income tax and self-employment tax. That self-employment tax alone is 15.3%, and that's before income tax. The good news, you get way more deductions than a W-2 employee. Number one, if you work from home regularly or exclusively, you could qualify for the home office deduction. There's two methods. One is the actual square footage, and two are the actual expenses. If done correctly, this strategy can save you thousands of dollars. You can deduct a portion of rent and mortgage interest, property taxes, utilities, internet, home insurance, and even repairs. Number two is vehicle and mileage deduction. If you use your car for business, you can actually get a deduction. There's the standard mileage rate and actual vehicle expense. Commuting does not count, but business travel does. If you use your car for business, you can deduct things like client meetings, job sites, and even business errands. Make sure you always track miles, dates, and the purpose of the trip. Phone and internet. If you use your phone and internet for business reasons, you're able to deduct the portion of that that is for business use. 50% business use, that's a 50% deduction. You can deduct things like client calls, emails, marketing, apps, and software. Just remember, you deduct the business purpose use only. Number four, supplies, equipment, and software. Thanks to bonus depreciation, you can take the entire deduction in 1 year, or you can depreciate it over time. This includes office supplies, computers, monitors, printers, cameras or tools, software subscriptions, and yes, even iCloud storage. Marketing and advertising is number five. If it helps you make money, it's deductible. Marketing is 100% a legitimate deduction. You can deduct websites, domain and hosting, social media ads, business cards, graphic design, and yes, even video editing. Number six is education and training. Things like courses, coaching, certifications, and workshops. If it helps improve your business, then you can take a deduction. However, it's not deductible if it's for a new career. Examples: industry courses, business coaching, continuing education, and professional subscriptions. Number seven are meals. 50% of meals are deductible. You want to make sure that the primary purpose is business related, and you also want to make sure it's not lavish, meaning you cannot go out and buy a $500 bottle of wine and expect that to be deductible. You also want to keep track of who you're meeting with and make sure you keep those receipts. Must be business related, not lavish, with a client or business purpose. And remember to always keep your receipts. Number eight is insurance and health costs. A lot of people do not know that they can deduct this, and it's often missed. Make sure you don't miss this one. You can deduct business insurance, professional liability, errors and omission, and health insurance premiums. Number nine is retirement contribution. This is one of the most powerful strategies for 1099 earners. Some could actually deduct up to 6 figures when contributing to a pension plan. I actually have a separate video on pension plans, so make sure you don't miss that one. These options include solo 401k, SEP IRA, defined benefit, or pension plan for high income earners. These can reduce taxable income, build long-term wealth, and create immediate tax savings. You can deduct up to $300,000 plus for a pension plan, and it's still your money. Number 10 is self employment tax deduction. You can deduct half of your self employment tax. You still pay it, but that deduction reduces your taxable income. A lot of people don't realize this. It's automatic as long as it's done correctly. Self employment tax deduction lowers your adjusted gross income, AGI, which also affects eligibility for other deductions and credits. Advanced strategies, business structure. How you are structured is very important, especially as your business and income grows. This is not a one size fits all, but it can be a game changer. I actually have a whole video on LLCs, the pros and cons, how to set one up. I will put the link below, but make sure you watch that video. As income grows, structure matters. Many 1099 earners eventually move to an LLC and possibly an S Corp. It allows for more flexible tax strategies, liability protection, and more control over the distributions of the assets. So, here are my final tips to avoid IRS issues. Keep clean records, use separate bank accounts, track expenses, and don't guess. Numbers do not lie. Document everything. The IRS is not looking for perfection, they just want reasonable documentation. If you're a 1099 and you're not planning, you're probably overpaying in taxes. Make sure you subscribe to my video, like, and please share it with another independent contractor who you think could use this video. And thanks for watching.